Good afternoon, everybody. We are given the mid-morning update on the Pacific West Coast. It's 10:28 a.m. Pacific Standard Time. It's 4/3 of calendar 2013. We have a 60-minute chart before us, MMTs. What we're doing is we're taking a look at where they finally got the S&P at the highs, all-time high, bull highs up to 1571. We all know that the upper targets that we had called for have hit. There was $14.72 reversal range. Each line here on a 60-minute chart is $2.87. In our system, it's 1/4 delta dollar movement. So once again, the 60-minute chart here, as we can see on a 60-minute level where all the dips have been being bought, we finally reached the upper end of that target, and we have a reversal right back down, almost mathematically right back down here in the middle part of the range. The resistance up here mathematically in our platform tells the story. The diamonds had the reversal, and for each 60-minute bar, we went down hard before. Just like before, 60-minute bar straight down, but they bought the dip. So every dip down that we've had, mathematically, we've made higher highs in every one of these corrections. One of the things that we're going to be truly focusing on today is that the earnings season starts April 10th of 2003. The S&P 500 is on zero. This is called the VIX, the VIX. It's a fear indicator on a 60-minute level here. And we can clearly see that the VIX on a 60-minute, when fear rises, you can see the invert of the S&P 500 day 60-minute chart here. So when the volatility index, called the fear indicator, goes higher in value, then the S&P 500 comes down and it hits a support line in our market maker platform. One of the things that you'll notice here, that this IR is at zero. That's why the S&P is extremely weak. When we look at the volatility index for today and some of the other days, it's very choppy. When that thing breaks up higher, then markets sell off. But when they come straight back down, then markets bounce back up in their bull mode. What we will be watching carefully is that the intraday range in our platform is at 100% here on the fear indicator on a 60-minute level. And we can clearly see that the high was 1362 and the low was 1262, and it opened right there. So what I want people to understand about the fear indicator is that when the two of them, when this is at zero, that's where the S&P 500 is, and it's falling on a 60-minute level. We can see the 60-minute bar. The fear indicator goes up, this goes down. So what we do is we buy calls on the VIX to go higher because it is at complacent levels where pullbacks happen, trading ranges happen in the pullbacks. The thing that is most important for our MMTs and our trader network is knowing what side of the market to be on. So if you've got put options on the S&P 500 at the 1570 strike price, you make money, and you can buy the calls on this 60-minute VIX, the VIX. And we just want to show our new MMTs. I go straight up in the 60-minute level, and the S&P 500 comes down. They're invert. So it's a good gauge in the shorter term as to where that consensus is. Is there fear or is there complacency? Obviously, as this goes higher, we know that the broader equity market is a short side tape, not a bull side tape, for an intraday level only. Now, having given those updates, once again, it's about understanding why I'm making money as this falls and why I'm making money here. I'm making money with the calls on the fear indicator called the VIX, called the fear indicator to the S&P 500 volatility index. That's what the VIX stands for. Okay? And this is a 60-minute reversal that we are getting, and the S&P, this remains on zero. We're down 1.32 in our system. That equals 5.31. 1/4 delta is at $2.87 per line. That's how accurate it is. Once again, it's our pleasure to invite you to visit us. We encourage that you open an account right here. Opening an account is this tab here. We will give you buying power to trade with. It takes money to make money. And we will invite you for a free trial period. The market maker division will do all of the dispatching the orders. And you will submit on the entry and you will submit on the exit. Click Get Started Today. We are live in the market, knowing what side of the market was extremely overbought. This is the S&P 500 60-minute chart, and right next door to it, right here, once again, this is the VIX, the fear indicator, on a 60-minute level, and we've been breaking straight up, and we've been falling intraday morning straight down, in the S&P 500 is in a great bull rally, but we're overbought. And the thing that I'm going to tell you, as long as this fear indicator keeps rising, then we would start to see where more profit taking is in the broader markets. But most importantly is that the broader market is to the downside, where we're making money on that side of the market today. And this is the update, once again, on 60-minute S&P 500 and 60-minute fear indicator called the VIX, Volatility Index. We would like to show you that this is the S&P 500 right here, down 15.27 handles, or 0.97% haircut on the day. And the Russell 2000 is down. The NASDAQ 100 index is down. The Dow Transports has taken a big haircut, down 65 handles. The NASDAQ composite is down 93, but the Dow Jones is down 95 points on that index. And we would be happy to tell everybody that as long as the fear is going to come up here, that's going to be the resistance level here now. And this is what it's traded like over several days. We broke out plenty of times. The fear got way up here to 14.56. Then the markets rallied up and we came right back down. So we are in a 60-minute daily ranges as to how we get this fear rising, but every time the market rallies back, it comes right back. But today, it's all part of the price volatility in the broader picture and the broader scope of understanding what side of that marketplace do I want to be on. Do I want to be the bull side to go up, make money? That's not how it's printing right now in the general equity market. So, once again, the Dow right now is down 100 handles. NASDAQ 100 down 35. NASDAQ 100 down 24. NASDAQ Composites down 35. And the S&P 500 right now is printing at 1554, down 16.18, or minus 1.03% on the day here on the 60-minute chart. So all of my new MMTs understand how to make money in both directional price movements. So if I have put options on the S&P 500, when the S&P 500 goes down, I make money. When I buy calls, which are very, very cheap to hedge risk, when this goes up, I make money on the calls going up here, and I make money on the reversals going down here, both in the same transaction period. We would love for you to attend the free 5-day trial live in the marketplace so that we can show you how accurate we are, that you can make an adequate decision. And why would that market maker alert service work for you, capturing intraday profits when dispatched by the market maker division?